Hello.
Hey, Globetrotter. You like the way I promoted you?
Yeah, that was pretty good. I liked it.
So, where are you now?
I'm at home in
Okay,
Arizona.
so do you need a vacation from your vacation, Rob?
Yes, I always
Okay.
need that. I
How do
always
you
do.
trade when you're on the run like that from country to country? And do you slow down on your trading? Do you look at longer time frames during that time, or you scalping when you're up?
I'm always looking at the 60-minute charts and 4-hour charts for my trades. So traveling has almost no effect whatsoever.
Okay. So what do you, your reputation precedes you here, Rob? You know, you've been here a few times and, you've taught a lot of people. You have a huge following of people that you've taught that subscribe to your service, your membership, your podcasts, your uh, new looks and methods of trading the market on a yearly basis. What are you laser focused on during this fairly slow time period with a bullish dollar bias that most participants have? I mean, I keep bringing up to people that all I hear is where to sell the euro and how far it could go down. You never hear it. No one's
Yeah.
talking about buying the euro. It's
Yeah, I live in a vacuum because I actually feel exactly the opposite. And it's so interesting. I've heard two things over the course of the summer. One I hear all the time, and the second thing I hear just in passing. The first is that the markets we've had low volatility, and I don't know if this has been a topic of conversation with you
it
guys, but
has.
it's certainly been a topic of conversation that I've overheard frequently, and I have to say it's been the golden age of trading for me. I as a divergence trader primarily, this what a year and a half has been like the most amazing period of time ever. I love it. I hope the volatility never comes back, and it's just been amazing for me because the market goes up and then the market comes down. The market goes up and then the market comes down, and it's been glorious. And at the beginning of this cycle of dollar buying is when I had to sort of brace myself to hold some of my trades a little bit longer or wait for them to set up a little bit longer because there's this trend which in historical comparison, this dollar bullishness is it's inconsequential. This is like what the dollar used to do in a couple of days. It takes like 2 weeks to do still. So it's sort of inconsequential. So I've
Yeah,
heard this
yeah,
whole
good point. I mean,
volatility.
we had that breakdown of the wedge in the euro at 135, 135.50,
Yeah,
and how much downside progress has it made in a month or two?
right. Yeah,
170
it's
pips, that would be one day after a breakdown, not a month after a breakdown. Good
yeah,
point.
and for 15 years that was a one-day breakdown. We're not talking about, oh, we got spoiled during 1 year. I mean, we got spoiled as currency traders from 1991 to 2013 or something like that. It was unbelievable. And so that's the first thing. I love this lack of volatility, and I don't think volatility is ever coming back in the same way that we had it before. And I actually, as far as I'm
Why,
concerned, I saw a lot of people margin call
yeah,
with
why do you
super
why
high
do you believe
volatility.
that it's never coming back?
But leverage is gone in the United
Okay, good
States.
point.
Leverage is gone in Japan. Leverage is probably going to be reduced in some other countries. Probably it's possible in the UK, but not as likely. So I think leverage restrictions have reduced the retail volatility, and then I think that
How about all the banks going through investigations and pulling their horn in?
right, right. So the second is speculation on my part, but if anybody has followed the New York Bank of Mellon and some of the stories that surround institutional FX, they make your retail broker, whom we all seem to hate from time to time because they're so dishonest. It makes our retail brokers
Look,
look
lawyer
like
boys.
you're. Yeah, they do. They it makes them look like unbelievably they're the best ever in comparison. And this is why I think volatility has decreased to a certain degree. You would have a lot of shenanigans in the institutional world where a $400 million manufacturing firm would want to sell euros with the New York Bank of Mellon, and the bank would say, all right, we can fill you later on today, but it's going to be at such and such a price. And there would be spreads that were airport quality currency exchange spreads given to these companies, and who could have opened up an account at any retail FX firm and seen they were getting screwed, and they weren't getting filled at the price that they could have been filled at the time they requested the trade. And I think you had a lot of volatility because there was money to be made by pushing the price further out on some of these trades, and you just don't have that anymore. There's too much of an investigation across the board from LIBOR to FX, which isn't getting the headlines that insider trading gets, but it's still massively consequential. And I think without some of the dishonesty in the institutional world, we're lacking that. And then on top of that, you've had interest rates converging for a number of years on the dovish side, on the tightening side. And so I think that we've just essentially seen less volatility because there hasn't been as much of an interest rate differential. It's still there. It just doesn't exist in the same with the same magnitude that it did in 2006, 7, 8 when we were all making money from carry trading.
Okay, you think you could share your screen now, Rob? If you're
I'd be happy to share it. Absolutely. Anytime. Here, I'll go ahead and
take a look at. I remember last time I had you on. It was during a corrective phase in the S&Ps, and Euro Yen was getting hammered, and you were saying, I'm just looking to load up my basket with Euro Yen, and it did recover quite a bit. So,
well, here we are again. Same story, different currency pair.
Okay, what's that? The Nikkei?
This is the dollar. This is the dollar Mexican peso, okay. And it's the second part of what we were just talking about. So first was volatility. Second is dollar strength, and I gotta say that. I live in a vacuum, and admittedly, my vacuum includes 1,450 of my friends with whom I trade on a daily basis. So it's a strange vacuum.
Is it a Dyson?
No, it's exactly. It's a Dyson, and I don't hear anyone. You and maybe a couple other people recently. I heard this dollar strength, and I haven't paid attention to or heard anybody talk about dollar strength at all. So it was kind of funny when you brought that up today, because across the board, I'm short dollar now. I mean, like across the board with no exceptions. And so it's kind of funny that we brought that up today, because it's the same story we had last time around, which is I understand the reason that people bought the dollar on the breakout maybe a week and a half or 2 weeks ago on dollar Swiss, dollar Mexican, or whatever, or euro dollar breakdown. I get that. I mean, I'm cool with that. At this point, though, of course you could see further dollar strength, and I'm not saying that I'm always right and I make a ton of mistakes, but I am definitely short the dollar right now. I sold the Mexican peso at, all the trades are listed on my screen here so everybody can see them at 13.0571, 13.19, 13.25, and then last night at 13.24. And I'm targeting last week's weekly pivot, which is approximately, if you include the spread, at 13.13.
Okay. A lot of bullishness surrounding the Mexico story. And, I mean, they're privatizing their oil business, which is, a generational move.
Well, that's totally awesome. I don't know anything about that either. That is fascinating. Yeah. No, that's totally awesome. I would like to know this. I mean, you're interviewing me, but where do you go for information besides the network of people that you talk to on a daily basis here?
I do a lot of intelligence gathering on my own, and there are a lot of people that I follow, and I follow geo developments in countries, and I'm actually considering a move to Mexico, so I'm kind of beamed in on what's going on down there, and I think it's got a pretty constructive story. That they have, it's going to become a middle class country. Net migration is zero. Everyone thinks that the Mexicans are flooding the U.S. They're not. And Europeans from Europeans are going to Mexico. I mean, if you speak the language and you're in Spain and you have a 50% unemployment rate for youth, why not go to Mexico?
Yeah, exactly. Yeah, I went to Cabo San Lucas in
That's
March.
where I'm thinking of moving to.
Yeah, well, as a matter of fact, I met a ton of people that are
expats living there.
Yeah, expats. I had dinner with several nights. I had dinner with people, some that had been down there for 15 years, and are having essentially the time of their lives. And I couldn't believe how inexpensive it was for them to live a life that was.
For example, here in San Diego, for me to have an ocean view place, decent place, you're talking minimum $2,000, $2,500. Down there, you can do it for under $1,000.
Yeah, exactly. And I also have a friend I met 5 years ago who moves to a different city in Mexico every 24 months or so. And his budget is literally, his total budget is $600 a month. And he's single and he's young and he doesn't live on the beach or anything like that. But he's essentially doing whatever he wants 24 hours a day and has a savings account. And he'll come back to the States when he's good and ready, and he has a giant savings account, and he's set for life, and he's doing well. So I think all of that is supportive of my position, maybe in the giant long term. I plan on holding this dollar Mexican short for another, I would say, 5 days. I would not be surprised if it closed today or tomorrow, but I could imagine being in this trade another 5 days, and I'm willing to be in this trade for another 3 weeks. I don't really care.
Yeah, it's a nice formation too. Looks like a head and shoulders top, or breaking down out of a wedge. Probably diverged at the high up there at your trade number 3. Did you?
Yeah,
because I know you're like me. You look for non-confirmations on highs and lows, and probably had one up there, huh, Rob?
Yeah, and it's a really good point. I think we overlook some of that stuff sometimes, and we track the story that we think we're supposed to track, and we don't look for those non-confirmations or those failures of strength, or the failure to continue to be weak. We overlook those things when we're sort of fascinated by some kind of a story that we get fixated upon.
What other pair has a negative dollar bias that you're trading? Are you looking for some kind of bottom in cable? I mean, cable's come.
Yeah, let's look at a few of those. Cable's the most difficult one. We could look at that, of course, as well. I have so many trades open right now. It's disgusting. I will read off my trades to you, and then we can discuss them. But I'm also short the dollar Swiss franc. I could have exited very nicely on Friday, and I did not do that.
I did it last week at that candle on that reflex rally towards 91. And I'm flat now too, but it still does have a negative bias. So 90-20 is your target, huh?
Yeah, 90-20 is my target, and I am still in this trade. I'm short at 90. I'm short at 90-20. I'm short at 90-69, and I'm short at 90-93. I think geopolitically speaking, conflict, disgusting and horrible conflict anywhere is good for the Swiss franc, typically at least, and I would gladly have this position become a loser if it meant that
I know where you're going.
I mean, I just can't. I mean, it's horrifying, and I can't stand it. But the reality is that I shorted this, and I don't really before I knew anything about it. It is the ISIS trade, and I would, exactly. Boy, have you read anything about that today? I can't believe these people stranded in the mountains, and they have no food, and they're being fired upon. It's unbelievable. Anyway, so I'm short the dollar Swiss. I do expect that. I have considered holding on to this position. And this is the part where you realize that I'm a complete nut job. These are the moon phases.
I've been accused of being a lunatic myself. So.
Yeah.
So we had a supermoon last night. The biggest supermoon of the year.
Yeah. Exactly. So hopefully I was going to wake up with superpowers. I did not. I even like 91. The monthly pivot for the month of August is at 90.15. And I will make this a little bit larger. I am considering a target of
89.50,
90.20 on that, of course, because of that monthly pivot. But I even think that there's a potential for this to drop a little bit lower
how
than
about
that,
new lows?
even still.
With everyone being
Yeah.
bullish the dollar now.
Yeah, right.
But 90.20, 89 and a half.
Yeah.
Very interesting look. I agree with you short term. Long term, it's hard to know what to do long term right now for me.
Yeah, it is, especially with the lack of volatility. In the past we could say, "Oh, I see dollar Swiss going to 94." And you can't really say that anymore because it's like, what do you're going to give it a bicycle? Like how's it going to get there? Like what, on the back of what is it going to arrive at that location? So it's very difficult for me, swing trading is kind of where it's at because I get enough volatility to get me to my target. I just have to wait a little bit longer.
I just have your peso target again, Rob? So,
yeah, of course. And, absolutely. My peso target is 1313. So just think of the unlucky number 13 squared.
Thank you. All right. So bearish U.S. dollar Mexican and bearish U.S. dollar Swiss. What else? Anything in the commodity currencies?
So we can look at the commodity currencies. Oh boy, yeah, we could definitely look at those. Let me pull up my pound Canadian, and we could talk about that for a moment. I'm probably also completely against the grain and going to get rocked on this as well. But let me show you what I'm looking at here. This is the pound Canadian. I am short at 83.80. I'm not saying that I'm theoretically short. I'm saying that I am actually short, and I will give you a lot number in a minute. I will tell you my size here, but I am short pound Canadian at 83.80, and I think I could have it if I were really going to go out of my mind. I would place a target at 1,200 pips lower, and then I would be carted off to the Arkham Asylum and next to the Joker and Two-Face. But I'm going to lessen that target and go for 76.50, and I'm willing to stay in this trade for 1, 2, 3, 4, 5, 6, 7 months.
Okay.
So
that's a little different from your normal work. So this is one of your better one of your favored long-term position trades.
Yeah, earlier this year I bought the Canadian dollar Swiss franc. I made a lot of videos about it. I was down at one point. I was down $37,000. I'm saying that I don't always make the right decision at the right time. So I'm not proclaiming my superiority. I added to that position at strategically timed, February, March, April, and then in May I closed that trade out. I was in that trade for about 3 months. I'm willing once or twice a year to hold a trade up to 7 or 8 months, and this is one of those. This is one of those times that we have. Of course, the British pound on an interest rate tightening cycle and an improving global economy. Of course, the British pound could be the big winner in that cycle, and it could go 1,000 pips against me. If it goes 500 pips against me, this trade will cost me 5%. Okay. So I don't stand to lose a significant amount of money, and I never do. And I'm not talking about a giant loss or a giant gain. If it goes in my favor, same deal. I'm going to lose a small amount of my equity. However, I like this trade a lot, and I like the yearly pivot is down at 68.50. It's not going to hit the yearly pivot. It's going to miss the yearly pivot in 2014. However, I think it could get halfway the distance to the monthly pivot for the month of December 2013 that was missed. Okay. And I think that some kind of an additional retracement here is not unexpected.
Would a big
and would
break
not
in Canada help this position?
Yeah, I guess what would you say? What would that look like to you?
I'm thinking 108 minimum in Canada, but if we're going to have a huge rally in crude oil and this dollar rally was just a bear market rally, I could see that Canada could be the catalyst for it. And I noticed you counted in time 1, 2, 3, 4, 5, 6, 7. You're talking 7 months of a range. So after you have a 7-month range, you're willing to give it 7 months to come out of the range and achieve its target.
Exactly.
Am I?
Yeah, it's exactly that. It's exactly that. And it's an analysis that I think is borne out over time. The other thing that I will often do, well, I don't say often because I haven't done it in a long time, but I used to do this a lot, is I would build a channel, and in addition to counting that range, I would clone that channel and say, my first downside target is a symmetrical copy of that channel. And I didn't plan this ahead of time, but the exact midpoint of that symmetrical channel directly below the one that we're in, the exact midpoint is kind of around where my target is. And that is not surprising
Almost
to me.
looks
That
like an Andrews pitchfork.
It does look like an Andrews pitchfork. And if I knew how to draw an Andrews pitchfork, I would have done that. And I bought a book. There's this paperback book about Andrews pitchforks that's available on Amazon. And I didn't buy it. I said, I'm not going to buy that. And then I don't know anything about Andrews pitchforks now. And I draw things that look like them, but I can't do it. But you're absolutely right.
Creative charting, Rob. So anything you want to wrap it with? And another great
So here's
interview.
a pitchfork. There's my pitchfork.
Okay.
That's my pitchfork skills. No, I'm a contrarian. I'm not ashamed of that. And I think the only currency that is very difficult to buy right now and understand is the pound. I think it has been so weak and gone so far down that I've kind of lost my confidence in going long that. And it's the only one where I say, geez, I'm cautiously bullish on the British pound US dollar, but avoiding it for right now. Maybe along at 67.85 with the target of this week's pivot, which is more like a day trade.
Yeah.
But not really. I mean, it hasn't missed in this downturn. Last thing I'll say is in the downturn, in this move down, it has rarely missed a daily pivot. And when it's not missing daily pivots on the way in a trend, what that shows is these are measured moves. They're not euphoric. They're not panic moves. And it is gently sloping as it goes, and that it's very difficult to correct because it's a move that's built up over time with confidence. When it's missing pivots and making extraordinary moves and in one day, what you're seeing is euphoria that can be quickly corrected and reversed. That's not this. This is pretty much a surprising trend, especially considering that we should be improving globally and the UK should be ahead of the curve, and it's not. So it's a tough call for me.
Sometimes the right trade is no trade. That's where you're at on the pound.
Yeah, exactly. Despite what you see here at the bottom of the screen, I mentioned on my morning video to everybody that you could take this as a day trade, but by no means. I'm probably wrong about this, by the way. It's probably going to shoot up like 200, but I just can't put my money behind it. I could take every other trade that I have right now, but I can't do that one.
Well, thanks again for joining us, Rob. I hope you catch up on your rest, and good luck on your longer term position trades, and nice discussion on Mexico, and glad that you came out of the vacuum to talk to our community today.
Hey, thanks to you. You have the greatest community of traders ever. I mean, on Twitter, you are so supportive of one another, and I just love you guys. So happy trading to everybody, and I'll talk to you guys later.
Rob. Good hunting, buddy.
Bye-bye.